See what I'm showing right now, so if the stream is visible or not, but nevertheless I will continue. Sorry about that, so for some technical glitches and issues today. So let's continue with the streaming session, because on my side I don't see any streaming, but yeah, but maybe it's still visible. So I will nevertheless continue the streaming session. Alright, so speaking of indices, so we've seen that the indices are on the new peaks. However, it's not, it's pretty dangerous situation to pursue the market on the new peak. So let's talk a little bit about some crosses. So we've spoken about the Swiss franc, Japanese yen. So what about, for example, euro versus GBP? So euro versus British pound. So as you see, this particular cross pair has some tendency to reverse at the peak of the 20-day moving average, 20-day Bollinger. Sorry, so that's not a trending instrument, but whenever it reverses, so that happens here. So the mean reversion activity usually dominates on this pair. So sometimes it's trending, but that might not be the case. So Europe feels, stronger than the British pound right now, so at least it's visible in the form of a rising trend. Trend is going up consistently, so you see that in the form of market going up in several solid upswings. So we still have some capacity of this market to continue moving up. So now it's I think the third day of the move. For day trading, that would be absolutely, I think, interesting to try to pursue some long position here. So it's not that volatile in comparison to other pairs on the one hand, but that's not a bad thing. So if the market is not very volatile, so that means that it's not very noisy. So in that case, particularly, for example, if you want to make some long here on euro versus pound, that might be done like that. So for example, whenever it consolidates, whenever it touches the consolidation area, or sorry, the support area below, you can think of potentially going long. So because euro strengthens against the GBP, and the potential resistance zone is above, it's 0.86 something ish, so that might be potentially above. All right, so let me try to read chart. Yeah, the stream is on. All right, the stream is on. Let me try to read chat. Maybe you have any questions here in chat. Oh, thank you very much. Very good analysis. Thank you very much. Join us every Tuesday here at Exness. Don't forget to subscribe. Bring your friends, because we think that some knowledge is worth to be shared. All right. So speaking of what might be on the radar this week. So as I said, so don't forget that Friday will be the muted price action. So July the 4th is the Independence Day in the United States. However, the crypto markets can get on the move, because Bitcoin has some tendency to rise on the holidays when the US markets are closed. So that's why I might be expecting, so we might be expecting the market actually to try to break through this consolidation on Friday, maybe between Thursday and Friday, end of day Thursday, so something like that. July the 4th, here it is, by the way. So you see that market is bouncing off the support, or trying to bounce off the support in case it reaches the 20-day moving average. So when we get the holiday, so we might actually get the shakeout on holiday, which is in our case July the 4th, Friday. It's the day after tomorrow, right? It's the day after tomorrow. Day after tomorrow is Thursday, so the next day after the day after tomorrow. All right. So that might be the shakeout. Why is that? So to understand the logic, so I want you to pay attention to what we call the on-chain analytics, on-chain analysis. Let's go to glassnode.com service. And I wanted to show you a couple of things here. So first of all is MVRV Z-score indicator for Bitcoin. So it's pretty solid. In our case, it holds at a pretty solid level, 2.44, meaning that's a bullish level. So that's not a overbought, oversold or anything. So you see the oversold condition or undervalued condition is keeping below. So here it is, the green area, and the red area is considered as the overbought, let's say, or the FOMO condition, or kind of what we call, euphoria condition. So we are not there yet, so market is still bullish, but still far from euphoria zone. That's MVRV Z-score. And also pricing bands. MVRV pricing bands might be a little bit more indicative because they show us not just the MVRV indicator alone, but they also show the relative position of Bitcoin in comparison to several kind of levels. 2.4 MVRV is here the orange line. The red line is considered 3.4. 3.4. So above the red line, so market gets into the FOMO condition. So it might go to the upside quickly, but also that's a subject of liquidation. So the quick liquidation can follow. Now we are just below the orange line, which means that we're still in the bullish phase, but not in the active bullish phase. So market is pretty close to developing the bullish trend, because currently, above the orange line, so the trend turns bullish here. So that's not a pricing indicator, that's the on-chain indicator, the on-chain analysis indicator. So with that, we can conclude that Bitcoin is kind of pretty sensitive to some upside breakouts. So whenever it goes up, so it might, sustain the rally, it might continue going up. So it's pretty sensitive to that stuff. So if you see any reversal here, for example, market touches the 20-day moving average, then, for example, it starts moving there for the second day, you might consider joining this trend because it's pretty bullish. So that's what usually happens in the bullish market. To understand to understand more statistics about Bitcoin, for example, we can go to coinglass.com to the Bitcoin tab and observe that we got some red bars here. The red bars is the outflow of the currency from the exchange to the blockchain. So for example, so by exchange you mean this, Binance, Bybit and all that stuff, so all those exchanges. So whenever market is going up and Bitcoin is being transferred to the blockchain, it means that market participants don't want to sell it immediately. They want to store it in a cold wallet, so they want to store it securely. They don't want to sell it immediately because when people get the money on the exchange, that usually serves one purpose, to buy or sell something. In that particular case, we see the different dynamics. So the market is going up, so the more money flows out of the exchanges. So you see that these red lines, and usually the bullish phase of the market corresponds to big spikes in the red indicator, big spikes, so it's usually moving down. So not all the time, but usually that serves as an indication of potential continuation of the trend. Not all the time, because sometimes it was just before the reversal, but at the moment at this bottom, basically the market was ready to move up. So, and vice versa, when we got the new peak, when the market is going up and the green histogram is going up, so that means that the money is flowing into the exchanges. Usually, why do people do that? Because they want to sell their bitcoins on the exchange. That's exactly what's visible here. For example, December 16th, 2024 or March 2nd, 2025, the same situation. So if you want to monitor if the Bitcoin will be ready for the reversal or not, you can actually monitor the inflows and outflows on CoinGlass. So it might be pretty interesting here. So now we don't see any pattern whatsoever, any similar pattern. So it just consolidates. So no inflows, no big outflows. So basically outflows are greater than inflows. So money is transferred from exchanges to blockchain. So that's why I am actually pretty bullish on Bitcoin right now, especially along with when the US holidays are coming. What about ETH? So ETH looks pretty weaker, so in comparison to Bitcoin. So it doesn't develop any meaningful price action as we see, so it just stands in the consolidation, not developing anything here. And well, sometimes ETH is responsible for making big moves. Sometimes it lags behind, but then it's a big bar to the upside. Well, it's incredibly difficult to time your trades on ETH in comparison to Bitcoin, because on Bitcoin, so the flow is more stable, so it's kind of going up and up and up in more stable mode. So yeah, for this week, especially considering that this is a July 4th week, so my focus will be on Bitcoin. Today my focus probably will be on today and tomorrow it will be on gold, so I will be looking forward if it might create some pullback potentially here. Well, now let's trade crude oil, because it was an interesting market so far for a couple of last weeks with escalation in the Middle East. And that's a good question. So many people start continue asking this question: what will happen with the crude oil? Well, what we've seen so far is the kind of pump and dump situation. It was going up, then it was immediately sold off after achieving the level above 75. It was sold off immediately, and it seems that the downtrend, the overall downtrend, is still intact. So even regarding this escalation, regarding supply and demand tensions, so it seems that the overall downtrend is still intact. So that's why I'm referring to this trend as a potential downtrend. Now the market is rather consolidating. You see that it's not developing the price action in any direction, so it's not visible yet, so it's not developing. But probably the trend is down, so meaning that in order to continue moving down, so first it might need to break this triangle or shake this triangle to the upside, maybe something like that, but I don't believe that this rally will last for long. So probably it will need to test $60 back again, because $60 is what? $60 is a fair price according to the supply and demand analysis provided by the Energy Administration of the United States. For example, let's put here STEO, and you see that the projection for this year is still below 60. That's the WTI future contract for crude oil, so it's still below 60, and for 2026 is considered to stay at this level, but this year is the approximation of potential decline of the price following the increasing or decreasing demand, probably decreasing demand, and pretty high stocks in storage. So that's why market is not, I think it's not looking forward towards oil going up substantially. So whenever it starts moving down, so this move down might be sustainable. So the main question is when to enter the position, because the upside shakeouts might be also pretty volatile, pretty aggressive in this case. Well, in this case, I would say don't rush too much to get into the trade. So let the market break. After the breakout, let some kind of consolidation establish, and then you might patiently and very accurately try to time your trade on one of the false breakouts, or maybe on the downside break, something like that. So that will be my take on crude oil. So I think that the resolution of the situation in the Middle East is already visible. So for example, let's go to flightradar24.com. So that's the website, and we've been monitoring this situation with the flights, and now I think it's visible that the flights are on, not in that particular amount, which might be safer, but you see that airplanes are flying above Iran, so all is okay here. So planes from Dubai, planes from Pakistan, Abu Dhabi, so they're all flying. From Turkey, they're all flying in the Iran airspace. So we can say that the resolution of the situation is pretty much achieved. So it was in the headlines, but it's now visible at least on the flight radar. So in a situation like that, by the way, so that would be the life hack for you, so you can monitor flight radar for potential, cancellation of flights or anything like that. Alright guys, so thank you very much for joining our today's streaming session. So sorry about technical glitches for today. So sometimes that happens, that's live session. Technical glitches are, not normal, but they happen. So internet connections, delays, so we apologize for that. We will fix it in the future. But we wait you next Tuesday here at the streaming session. Don't forget to give us a like. For YouTube algorithm, invite your friends next time. And see you later. Next